What is going on, everyone? Welcome back to another video, another day, another dollar with your boy. And we're going to be breaking down our futures contract per usual. And, well, it's been choppy. Been very choppy. We're going to break down our monthly chart. We'll look at our weekly chart. We'll look at our daily chart. I left you guys off on Thursday. Did not make a video Friday or over the weekend. Did not make a video yesterday. I do apologize, but just, living life. I did, have a really good day on Friday, and then ended up, I didn't trade at all yesterday, thankfully, because it was kind of a wacky day. We will review yesterday's price action on the 30-minute time frame, and then we'll review today's price action on the 30-minute time frame. And I got hurt once again on today's price action. Just too much size. Stops too wide, and not really paying attention to the market generated information that was given to me. Definitely should have kind of taken that into account. However, days like today, it's tough read to begin with, especially when you're not seeing it well. I should have just, because I didn't see it well, I should have just stepped back and kept my hands off the keys. So let's go ahead and break down our monthly. Monthly has been one time framing up for 4 months in a row. We continue to one time frame up on the monthly. Very, very strong, very positively. We took out last month's high by a pretty good margin, actually, and then we've come back in to last month's range. Now, I'm not expecting us to take out last month's low, which would be 48.7450. That would be kind of a disastrous move down for the buyers. However, monthly is still very healthy. Now in the weekly, however, has come back to balance. We are now back to balance on our weekly time frame. Now, something I do want to keep in mind is where we're at. All right, we had came back into balance, broke out of balance, one time frame up for 2 weeks. So far this week, it's looking like an outside week down scenario. Why is that? Well, we took out last week's high. But pretty decent amount, right? Set new all-time highs, and then we've come in pretty aggressively. Now we do have, I think Jerome Powell testifies at some point in time this week. I'm not quite sure what it is or what the time frame is on that. However, I do know there's a lot of noise this week, and that might have caused a little bit of profit taking, as well as some stops being ran from the technical side of things. So, definitely, never be afraid to take profits whenever you have, swung, say you've taken the trade from 49.60, you're from 49.60 to 51.57. You're basically 180 points in the money right there, right? Definitely take some off. So would not be surprised if that was initially a little bit of profit taking, and then now maybe some shorts kind of stepping into the market. As well as people like myself trying to catch a falling knife, just continuously getting stopped out. So weekly is one time framing, or what had been one time framing up, but now we're back to balance by taking out last week's low. We did take out last week's low of 50.67. We had 3 daily lows that were in the same range right there, and we took that out today and started to get into the buy tail, and we'll look at that on our 30-minute time frame when we get to it. But something I do want to take note of is how this was our previous weekly balance high of 50.6650. I think that's going to be a key level for us to hold, anywhere from that 66.50 level to basically the 50.50 level. Okay, I think that's going to be a key area to hold. But so far, we're struggling above 5,100. Each time we've gotten above 5,100, we got above 5,100 here. We came back in. We got above 5,100 here. Now we've come back in. So 5,100 has been a very difficult time for us, to say the least. So let's look to see if we hold here, right? The daily and the weekly has come back into a balance. Now the weekly is still forming its balance. The daily has just developed its balance, and I'll update those parameters. But if we do continue to push down lower, this weekly balance could become larger. But that's why I'm saying you want to see a hold between 50.6650 and 50.50. If we come in more than that, we will begin to encompass this week right here, the beginning or the second week of February, right? Or the third week, whatever it is, third third week of February. We'll be incorporating that as we come in, right? So buyers definitely want to find a hold here. Would not be a terrible opportunity to take a long, and I'll show you why on the daily. So let's go ahead and bring that up. So here's the daily, right? Now keep in mind, we have gaps on the downside, and now we have a gap above us because we had gap down into the open today. The 20-day moving average right around that 50-50 level. Another reason why I say that 50-50 level must hold, from that 66.50 to that 50-50 level must hold. We held in this range several times. We definitely want to see buyers hold in this. If not, then we will get into this large gap here and come back into this this balance range that we were in prior. Okay. Now this was our previous balance that we were in. We broke out of it on our daily time frame, broke out of this previous balance, one time frame up 2 days, and now we've come back in to a balance. I'm kind of battling with myself, incorporating this whole thing, saying that this would be this whole thing from 50-52.25 to 57.50 would be a whole balance range. I think I might call it that just because of the sheer fact of where the 20-day moving average is located, and then we have that gap below us. And I think if we get below that, then the daily will be one time framing down. But I think I might just, you know what, we might just say that the balance low is definitely going to be today's low. So balance low is going to be today's low. We take it out, we should get to that 52.25 daily low. Where the gap starts, should get to that 20-day moving average. And then if we get below it, obviously we will most likely fill the gap. It will not be easy to fill that gap first time. We will most likely fill that gap. The 50-day moving average is continuing to ride on up. However, we could just continue to have a period of consolidation, kind of like we did here. We consolidated in this area for, what was it, 1, 2, 3, 4, 5 days, basically a week's time frame. Before we decided to get a move to the upside late last week. So let's go ahead and update this balance here. And then we'll get into the nitty gritty of our 30-minute time frame. If you made it this far, please leave a like down below. Comment. Let me know how you've been trading. Has this market been something that you've been profitable in? Is it something that you're struggling with? I know currently I've had my days, but I've definitely been struggling a little bit more as of late. You know, when we had these run-ups here, I was doing okay. This choppy mess right here has been very difficult for me to trade in, to say the least. You know what? We're going to keep the daily balance low right there, 50-52.25. So we are in a 1, 2, 3, 4, 5, 6, 7, 8-day balance, right? We've come back into this balance range. We're in a 8-day balance now, looking to come out of balance one way or the other. So moving forward, if we get below 52.25, the daily will become one time framing down, and we'll most likely like I said, most likely get below that 20-day moving average and fill the gap. However, if we hold here above the 50-50 level, should rotate up and test the other side. We are in a 100-point range, 105-point range. So there's a whole lot of room for a whole lot of chop, and we'll just have to see where this market takes us. Now we do have this small upside gap here. The question becomes, which gap gets filled first? Will it be the downside gap where we had an island reversal, or it will be the upside gap? That is going to be the question moving forward. Now let's go ahead and look at our 30-minute time frame and kind of just review what happened yesterday and then today. Let me get rid of all these destinations real quick, kind of give it more of a blanket look. But this is what this 8-day balance is looking like, right? 8-day balance, right? You want to see buyers hold here. You want to see sellers step in this range up here, right? So we can chop in between this range here for quite some time. This is just a rough, kind of rough estimate there, but that is, you can see a whole lot of chop being developed in this area. And the last few days, price action has been pretty wacky as well. Yesterday's price action was pretty dull. We had opened up in the upper distribution from that trend day up that we had on Friday. Like I said, I had a really good day on Friday trading it. We opened up in the upper distribution on Friday and just kind of chopped around in that upper distribution before kind of spiking up higher, creating a set of single prints, only to get filled late in the day where we had like a mini liquidation break in M period where we went from the highs of 57.75 to thinking that we were going to take out the low down here at 35.25 and got to a low of 37. So we had a 20-point move from the highs into the last two time frames of the day to the downside, right? So very, very tricky price action. We had a 10Y point of control that we went out with. So that is an upside destination for us because we gapped lower today after that move down yesterday and had that 10Y point of control. So like I said, maybe some profit taking up here. And then whenever we did eventually have that stop run and spike up higher, those laggard buyers gave it up. And as we came in, those that were long and had profit definitely took some off the table. And then obviously with the gap today lower, we opened up in the lower distribution from that day on that trend day on Friday, as it was a triple distribution day up. If I can identify for you guys real quick where that lower distribution was. Here's the lower distribution. Okay. And then here's that middle distribution. The middle distribution was a little bit larger. Where's that middle? There's the middle distribution that I'm highlighting. So we opened up in the middle, pushed down to the lower, and then we kind of just battled back and forth between those two distributions before finally taking out both sides of A period. Once B couldn't really get into the gap by much margin. Once B period could not really take out A's high, get much extension to go fill the gap, we eventually rolled over and went trend down, creating a set of single prints to the downside, and then began to attack the downside destinations that we had here. And then eventually getting all the way down, creating what was a triple distribution day down, excuse me, after a period of consolidation here. We did attempt at a triple distribution day down, which got taken back late in the day by some pretty strong short covering in my opinion there at late in the day. But look where we got back to. This was an area of interest way, last week, right? We had a pretty large point of control, those two back-to-back days of points of control right here around that 77, 78 level. We came down into it and held it initially. And that's where I got in trouble today. I got in trouble in the long side early on in the day, thinking in D period, we would not really push down lower because our next downside destination was not until this low down here at 70. So I was like, maybe if they don't really get going to the downside, it would be a good opportunity to take the long and go fill single prints up here at 5107. That's what I was looking for. So I had a nice 25 lot of MES on, and it pushed up, didn't quite get to where I needed it to, and I got stopped out when it came back down below 89.75. Got stopped out, was not a very pretty loss there. I did not get involved on the short side here. I should have, but I just was not around my computer at the time. So did not get involved on the short side there, which resulted in a great risk reward opportunity short. I just, whenever you have an opportunity like this right here, it's a great risk reward short opportunity against the previous time frames high. Yes, we had stopped the one time framing down, but look at how we were holding the set of single prints, right? I'm highlighting what the set of single prints were. Okay, this is where I should have been involved. I just wasn't around. And I missed the short here, right? Once F period pushed up, couldn't fill the set of single prints, and then in G period, you pushed up to 99. Maybe you have your stop above 5100, right? We knew that 5100 level was going to be a difficult area. We were looking for it to roll over, right? So say you're short, thinking that 5100 is definitely going to be a difficult area. You have gap down, you have value lower, you have single prints above you. Not only do you have that above you, look at where the in that time frame. Let me zoom this in. That's ugly. Hold on. Look at where those highs were. We had just gotten above the 144 simple moving average. Yes, but we were staying below VWAP, okay? Staying below VWAP, and then eventually this decided to kind of just gradually drift lower. So had you taken that short up here against the set of single prints and against VWAP, you know, you definitely came out with some hay, especially if you held it to the day's low from 99 all the way down to where the previous low was at 83. You made pretty good profit off of that. Now, where I got caught again on the long side was in J period. I got long, actually made money initially, looking for us to come back up to this point of control here. I was looking for us to get back to at least 91 because we had developed a wide point of control up here. So I was thinking in J period, we could at least push back up to that level. We got up to 97 or 87. I was long 84s. We got up to 87. I was out on the contracts. I had about 30 lot on there. Like I said, I was looking for 91, but seeing the lack in tempo and the push up, so I got out of the trade. Was happy with it. Took back some of the loss that I had earlier in the day when I tried to take the long. And there's absolutely no reason for me to get long here because we had begun one time framing down again, and we had just set a new low in the day. There was no reason for me to get long, but I decided to get long again, thinking that okay, maybe we didn't do it in J. Maybe we can get long again around 85. Use the day's low as my out, and then we'll grind back up to the point of control here that we had at the time, and get a wider point of control because there didn't seem like they really wanted to go triple distribution day down. I was clearly wrong. I didn't have my stop in at 80.50. I actually did initially, and then I moved it lower to that to the area that we were talking about here, right? That 77, 78 level. So I moved it about 3 points lower and added to my position when we came in. I was long 85 prior to this time frame opening, thinking, okay, it would be a good risk reward long to the upside. Obviously not a good risk reward long, very, very poor risk reward long to say the least. And then I moved my stop lower, which only caused more damage. So I was oversized, moved my stop, didn't respect my trading plan, and did not respect the short-term traders, did not respect the market-generated information that was given to me, and I paid the price for it. This is why, traders like myself, I'm one of those people. I'm somebody who has not been a very profitable trader as of late because I do things like this. I get too big in a market where I shouldn't be getting too big, right? Where opportunities are not very present at the moment, especially when we've come back into balance, and I'm taking the opposite side of what the trade that I should be. I should not have taken the long here. I should have maybe taken the short even to go down and get those lows down here at the low, but I did not. So obviously paid the price for that, and then just did not trade the rest of the day as I took a pretty hefty loss. But yeah, this is what we go out with. We go out with a gap, high day, set at single prints, not even a wide point of control, no afternoon rally high, and then the low of day. Look at how we pushed through these lows of days right here. These 3 low of days I was talking about, back to back to back. I knew at some point in time those would get hit. We just didn't know when. And then we have poor low. That was a poor low, by the way, right here at 63. Just fascinating market, fascinating time to be in the market, trading at all-time highs. And I'm trying to learn, trying to become a better trader, and obviously making boneheaded mistakes like that, trying to do a bit of a mean reversion trade in a market where mean reversion trade has not been very profitable. So moving forward, I'm definitely going to be more cautious and more prepared to do the right thing. Even if you had taken the short after we had pulled back here, right? You pushed up 95 against the previous time frames high, 95.75. You're one time framing down at this point. Maybe you take that short to get the day's low. Still, even then, was a good risk reward short, knowing that my stop was out. So until I'm going to definitely be more better. I know that's not the right sentence, but I'm definitely going to become better at taking better trades and staying out when I shouldn't, right? So let's go ahead and give you guys some destinations here. So we have a double distribution. Like I said, we attempted to go triple distribution when we had a set of single prints here. Did not hold, as they did kind of push back up rather aggressively late in the day. We go out with a double distribution day. This upper distribution being from 5121 to 5107. That 5107 level has been in my head for some reason. I think it's at 5112 to 5107. I think we had a wide point control there. Yeah, this was a wide point of control back from that day. So 5107, where the single prints fill. So that is the upper distribution day. Upper distribution 5107.25 to 5121.50. Lower distribution is a much larger distribution due to the fact that we failed at a triple distribution day down. So it is just a larger lower distribution from 50.99.25 to 50.63. If we open up inside of this lower distribution tomorrow, inside of value, inside of the previous day's range, it will be the worst of your risk reward trades. And it will most likely be rather choppy, as this is a pretty decent size range from 99 to 63. You know, you're looking at a 36 point range, 34 point range. It is a very large range, and we can chop inside of this, especially since the daily has just come back into a balance. So prepare yourselves. Definitely reduce size. That's something I'm going to look at doing. I've been more confident lately, as we know, I had good days, so my size was increasing, but now I'm definitely going to go back to the original 1 to 5 micros, and then whenever the market is in a trending direction, and like this day here, I will look to size up on that for sure. But moving forward, look to keep stops tight, use smaller size, keep risk where it should be, and stay on the right side of the fucking market. Downside destinations, you take out today's low 63. You have nothing until 52.25 where the gap starts. The gap gets filled down here at 49.98.25, 48 or 49.87 where the price probe is, then 49.79.25, 11 wide point of control. If we hold our balance low, which I said is going to be 52.25, if we hold that and we open up inside this day's range, we rotate up higher, the single prints fill, it will be your destination at 5107.25. You have nothing until 5121.50, and then the gap fills at 5135.25, where we have a 10 wide point of control above that at 5141.50, and then the all-time high 57.75. I don't suspect we'll get there in a quick manner. I think we're going to chop around in this this range for quite some time, actually. So we'll see. With that being said, ladies and gentlemen, thanks for stopping by. Future me, fucking do better. I'll catch you guys in the later. See you.